Hello there, this is Hustle Muscle and welcome to Hustle Muscle Invest. If you're new here, this is where I document how I build long-term wealth while working full-time and picking up side hustle income from gym shifts. I'm your everyday Singaporean, living in an HDB flat, no car, and am starting to invest diligently for my future self. I combine savings and side hustle income to invest into the investment portfolio. And in this video, I'll show you how I've put in more than $11,000 year to date with this commitment and how this portfolio has done a 9% return year to date as well. For the side hustle income, let's start with the basics. I coach part-time at 2 fitness studios. Each shift averages about 2.5 to 3 hours, and that would net me $100 per shift. As of 23rd July, I've clocked 6 shifts, which equates to $600 that will be pulled together with my salary as investment budget. Yes, the more gigs I do, the more side income I'll get, but I try to balance it with whatever time I have depending on the commitments from my day job. That might not seem like much for $600, but consistency is what enables me to build my portfolio. There may be more opportunities for me to take on other gigs apart from gym coaching, like tech consultancy, but those are generally one-offs, and although it pays pretty well, averaging $1,000 to $1,500 for maybe 3 hours of work, it does take a lot more from me, and it's very intensive on the brain work. So given a choice, I would still choose fitness as that's my passion and I would really want to do it for fun. For the portfolio, since January, I've invested $11,204 in total. That's just me showing up and being consistent with my money and putting it to work. Right now, my portfolio is up about 9%, not because I've timed the market, but it could also be due to luck based on the entry prices that I've had in late last year and earlier this year. Before we start, just wanted to give a disclaimer out there that this is not financial advice and this is just a video for me to track my personal investing journey. Now, here's a quick breakdown of what I own. Locally, I've got Keppel, OCBC, ComfortDelGro, STI ETF, Maple Tree Industrial Trust, and CapitaLand Escort Trust. On the US side of things, I'm trying to DCA into VOO, the Vanguard S&P 500 ETF. In terms of performance, the two top contributors to this are Keppel and STI ETF. Let me break down why they've done well. For Keppel, it has been repositioning itself from offshore and marine into infrastructure, energy, and data centers. They've been monetizing non-core assets, cleaning up the structure, and focusing on recurring income. Investors are starting to price in this transformation, and personally, I've seen strong capital gains here since January. As you can see down here, it is the strongest among my stocks, and it's one of the main things that have lifted the entire portfolio. 9% total, I think most of it comes from Keppel. And then the other one that also did a lot of heavy lifting for the 9% return is the STI ETF. The STI ETF is benefiting from strong performance by the local banks, DBS, OCBC, and UOB. Like I've said before, given a choice, I would like to own DBS and UOB as well, although I currently own OCBC. Banks make up more than 40% of the STI index, and solid earnings in Q1 and Q2 have lifted the whole basket. It's not flashy, but it's a core holding that's doing what it should. For dividends wise, which I'm also tracking, As of June, I've earned $583.03 in dividend income. That's money that worked for me by just staying invested. OCBC and Keppel were the top contributors, around $171 each. The rest, with little contributions like ComfortDelGro, STI ETF, are also there. And then for Mapletree Industrial Trust and Capital Ascot Trust, they have not started contributing because I bought them in a cycle where the distribution cycle was just over. So in the next few quarters, expect them to contribute to the dividend income pie. With earnings season going on right now, here's what I'm paying attention to in my portfolio. Just doing a quick one. OCBC, I'm watching their net interest margin and whether or not they maintain payout ratios. If margins compress due to lower interest income, dividend growth could slow, but I expect stability from OCBC. For Keppel, I'm looking for year-on-year growth in their infra and asset management segments. If that continues, I may feel more at ease should I increase my allocation towards Keppel. At this point, I'm not sure yet. For ComfortDelGro, it is still a recovery play, so I'm hoping to see some margin improvement or contract wins in the public transport space. Do note that ComfortDelGro is not a small company. It owns Vicom, and there's a lot of things to talk about for ComfortDelGro, which I'll dive in the next few videos if you guys would like to see that. And then for the REITs, Mapletree Industrial Trust and Keppel and Ascot Trust, to me, I just want to see that they are holding their DPUs steady and flat. Being flat is a win already for me in this climate for them. And then for VOO, I'm watching US earnings and whether the broader S&P rally continues. It's been strong in tech so far, but I'm curious and staying patient. Then what's next? Moving forward, I'll continue adding to my SG dividend portfolio using income from my day job and gym sessions. At current, I'm also looking at building a US growth strategy. Although it started with VOO, eventually I would like to branch into a few individual names when I'm ready. I'll be talking about that a little bit more when I initiate a position. So that's where things stand. Over $11,000 invested year to date with a 9% return so far and over $580 in dividends earned, funded by sweat, consistency, and importantly, staying in the game. If you're investing too, I'd love to hear from you. What's your year-to-date return? What stocks are you watching this earnings season? Drop me a comment or DM me. If you want to follow this journey from gym shifts to growing wealth, hit like, subscribe, and I'll see you in the next video. Thank you for watching.